Hi everybody, greetings of the day. Hope you guys are all doing good. Hope you are all perfectly fine. So we are coming before you through this video in order to bring it to your attention that which we are all aware. Recently ICAI has released the RTP for the current attempt, which is November 2022. So in this video we want to take you through this RTP which has been released for this current attempt. And before I actually start this discussion and all, there are no such major new amendments or something which has been introduced as a part of this RTP. So some random questions were tested here and there, and a slight here and there some new questions were added. That's it. Apart from that, no other changes which have taken place. So without any delay, let us proceed further with understanding these concepts. So first, some information has been given before the questions are actually getting started. So one is regarding shares issued at a discount. This is not actually anything new. Why? Because the same information has been given even in the previous RTP also, which we are already aware that company generally shall not issue any shares at a discount except in the case of issue of the sweat equity shares, which normally means that in normal circumstances the company cannot issue shares at discount. But if it is a case of issue of sweat equity shares, then the company has been given the permission to issue the shares at a discount. Apart from that, any share issued by a company at a discounted price shall be void. So once again, this point is other than sweat equity shares, in other circumstances, if the company has issued the shares at a discount, that issue of shares will be void. That will not have any kind of legal validity. Next one, notwithstanding anything contained in subsection 1 and 2, that means ignoring whatever has been mentioned in section 1 and 2, a company may issue shares at a discount to its creditors when its debt is converted into shares in pursuance of any statutory resolution plan or debt restructuring scheme in accordance with any guidelines or directions or regulations specified by RBI. That means ignoring whatever has been mentioned under section 1, subsection 1 and subsection 2, they say that in case if the company is giving the shares to their creditors as a part of some statutory resolution plan or some debt restructuring scheme which is approved by whom? RBI. So if one scheme of restructuring has been announced by the RBI, as a part of that restructuring scheme, if the company wants to issue the shares at a discount to its creditors, they can do it. That is also permitted. Why? Because they are telling here notwithstanding anything contained in subsection 1 and 2. That means ignoring whatever has contained in subsection 1 and 2, the company can even issue the shares at discount to the creditors as a part of statutory resolution plan or some debt restructuring scheme which has been approved by RBI. Similarly, if any company fails to comply with any of the above provisions, then there will be penalty, then there will be punishment on company also and every officer who is in default. That means if the company without even if it is other than sweat equity shares, other than shares issued at a discount for settlement to the creditors, still if the company in other cases have issued the shares at a discount, then such company and also every officer in default shall be liable for what? Penalty. And what amount of penalty, sir? Which may extend to an amount equal to amount raised through the issue of shares at a discount or 5 lakh rupees, whichever is less. What will be the minimum penalty which could extend up to, which could be either 5 lakh rupees or whatever money that you have raised by way of issue of shares, whichever is lower. Assume some 10 lakh rupees of money has been raised through that issue of shares at discount, or 5 lakh rupees, whichever is lower. So the penalty here will be 5 lakh rupees. On the other hand, if the amount collected by issue of the shares at discount is 3 lakh rupees, 3 lakh rupees or 5 lakhs, whichever is lower, 3 lakh rupees will be my penalty. On whom this penalty will be there? On the company the penalty will be there, and also every officer who is in default. And not just that, the company shall also be liable to refund all monies received with interest at the rate of 12% per annum from the date of its issue of such shares to the persons to whom such shares have been issued, which means the company should even compensate for those people who have subscribed to that shares. They have to refund all their money back. Along with that, they even need to pay interest at the rate of 12% per annum from the date of that issue of the shares. So these will be the consequences. And in case as an auditor, if you are conducting audit of some company, so I need to keep these points in mind. I need to check specifically that company did not violate these sections of the Companies Act regarding issue of the shares at discount. So what specifically we need to check? The movement in the share capital during the year and whether there is any issue. First, try to understand what is the movement happening in the share capital. You should verify that company has not issued any of the shares at discount by reading what? Minutes of the meeting of directors and shareholders authorizing the issue of the share capital. Nothing but go through the minutes of the meeting of board of directors, go through the minutes of the meetings of the general meetings. From that you can come to know whether really company has issued the shares at a discount. If yes, for what purpose they have issued it. Further, the auditor should also verify that whether the company has issued shares at a discount to its creditors when it is converted into shares in pursuance of statutory restructuring plan or debt restructuring scheme. Nothing but as a part of any special scheme the shares are issued. Why? Because this is permitted under Companies Act. This needs to be verified by the auditor. So this is what one point which has been given here. Now, after that, one more content has been given regarding penalty related provisions of the auditor. Nothing but, as we all know, section 139 till section 148, and particularly section 148 talks about company audit, 147 talks about penalty. So section 139 to 146, these are the sections which are talking about how to conduct audit of a company. So these a few sections talk about procedures for appointment of an auditor, procedures for removal of an auditor, procedures for resignation of an auditor, procedure for rotation, who is eligible, who is qualified, who is disqualified, what should happen if there is a subsequent disqualification, what are the powers, what are the rights, everything has been explained in section 139 to 146. Now, in case if the company violates, if the company or the auditor, if anybody violates the provisions of this section 139 to 146, they will be liable for a penalties and imprisonments, etc. So that penalty provisions are contained in section 147. So 147 is going to contain provisions related to penalty for non-compliances of section 139 to 146 of the Companies Act. So now what is that punishment for non-compliance? Let us have a look at it. If any of the provisions of 139 to 146 is violated or contravened, then the company, what will be the liability on the company? So the company shall be liable for penalty of or punishable with a fine which shall not be less than 25,000 rupees but which may extend up to 5 lakh rupees. This liability is on company, minimum 25,000 which can go up to 5 lakh rupees. Similarly, every officer who is in default, like if any directors has specifically has done a default, then such officer will be punishable with a fine which shall not be less than 10,000 rupees but which may extend up to 1 lakh. Earlier there used to be imprisonment for 1 year also on the officer in default, but through this amended provision, officer in default is punishable only with fine. Imprisonment has been removed. That is why they have specifically given it in the RTP. So what is the reason for specifically giving this content? Earlier, an officer in default used to be punishable with a imprisonment of 1 year also, but that imprisonment of 1 year has been removed. Now even officer in default is also liable for penalty only, which is going to be 10,000 minimum, which can go up to 1 lakh rupees. Now, if the auditor contravenes any of the provision, if the company or officer in default, we have seen penalty. What if the auditor himself is violating the provisions? Then the auditor shall be punishable which shall with a fine which shall not be less than 25,000 rupees but which may extend up to 5 lakh rupees or 4 times the remuneration of the auditor, whichever is less, which means minimum penalty is 25,000, maximum penalty will be either 5 lakh rupees or 4 times of the auditor's remuneration, whichever is lower. This is the maximum penalty. Minimum penalty will be 25,000. It may be noted that if the auditor has contravened the provisions knowingly, willfully, with the intention to deceive, cheat the company or its shareholders or creditors or tax authorities, he shall be punishable with imprisonment for a term which may extend to 1 year and with the fine which shall not be less than 50,000 rupees but which may extend up to 25 lakhs or 8 times of the remuneration, whichever is less. That means with the intention to commit a fraud, with the intention to cheat the shareholders or any other statutory authorities, intentionally if you are violating the provisions, then in addition to the penalty you will have imprisonment of 1 year. Apart from that, minimum penalty will be 50,000. Maximum penalty can go up to either 25 lakh rupees or 8 times of auditor's remuneration, whichever is lower. And apart from that, auditor should even refund the remuneration which he has received from the company, and also pay for damages because of your wrong opinion, because of your violation of the provisions. If any of the persons have suffered the damages, all that damages are also required to be compensated by the auditor. And also, for the purpose of collection of the damages, even the central government can appoint any statutory body or authority also, which will make sure that this auditor is paying compensation to everybody. Next one, where in case of audit of a company being conducted by audit firm, if an audit firm is conducting the audit, if it is proven that the partner or partners of the firm have or has acted in a fraudulent manner, or abetted or colluded in a fraud, or in relation to or by the company or its directors or officers, the liability, whether civil, criminal, as provided in the act or in any other law for the time being in force, will be for such partners or concerned partners of the audit firm, jointly and severally. So the thing which they want to say here is, in case if the firm has committed a violation, the responsibility will be there on jointly and severally on all the partners. However, in case of criminal liability, in respect of liability other than fine, like imprisonment and all, then only concerned partner will be imprisoned, not the entire firm. You can't go and keep all the partners. Criminal liability like imprisonment and all, that should be on the heads of only one such concerned partner, whoever has committed a mistake. In rest of all the fine and all, that fine and penalties will be on the entire audit firm, not just on one particular person. Next one. So let us now try to understand remaining things also. So this is what the content which has been newly added. Now let us try to understand the questions which have been given here. So now a case scenario based question has been given, like so and so they talk about a company which has been so and so audit firm like SAM and company, a chartered accountant firm, is appointed as auditor of some company which is Wealth Limited, and it is actually a listed company, and it is in the business of running fitness business. So they are running a chain of fitness centers that offers energetic groups and also multiple work formats. Now they talk about some engagement team related details. So the engagement team contains 8 members. They have conducted audit in an efficient and effective manner. So now they are telling their observations in the audit, like CAK is of the opinion that they have obtained sufficient appropriate audit evidence which concludes that misstatements either individually or in aggregate are material but not pervasive to the financial statements. And one of the articled clerks, Mr. N, is a fresher, and this audit is his first experience as an auditor in a limited company. He is a sharp boy and has grasped all the concepts and techniques very well. However, the term pervasive confused him. So CAK patiently explained to Mr. N the pervasive effects on the financial statements as per auditor's judgment. He explained that pervasive effects on the financial statements are those that in the judgment are not confined to specific elements, accounts or items of the financial statements. They are explaining to one of the article assistant, engagement partner is explaining when a misstatement will be called as pervasive. He is explaining that a misstatement will be considered as pervasive if it is not confined, if it is not just restricted to specific elements, accounts or items of the financial statements. Or even though if it is so confined, even though if it is restricted, it represents or could represent a substantial portion, it is representing a major portion of the financial statements, even if it is restricted to one item, or in relation to that disclosures which are fundamental to users' understanding of the financial statements. Or if the misstatement is happening with regard to such a disclosure which is very fundamental to users' understanding of financial statements. And then finally, if it is not confined to if it is confined to specific elements, accounts or items of the financial statements, if you observe carefully, this is wrong. This will not come under definition of pervasive. Why? Because a misstatement will be considered as pervasive if it is not confined to specific elements. He is explaining that even if it is confined to specific elements, then also we call it as pervasive. This is actually wrong. The first 3 things are only included in the pervasive definition. Next, Mr. N understood the term well and thanked CAK for clearing all his doubts. Now what he is telling? CAA disagreed with CAK that they have obtained sufficient and appropriate audit evidence, which concludes that misstatements individually or in aggregate are material but not pervasive. Nothing but there is a disagreement between the partners in the firm. So the entire team held various meetings and discussions, and they finally reached to a conclusion. They concluded that they have obtained reasonable assurance that the financial statements as a whole are free from material misstatements, whether due to fraud or error. And they have taken this conclusion after taking into account whether they have obtained sufficient and appropriate audit evidence, whether uncorrected misstatements are material, and also their evaluations. And also, now they talk about the audit report related content. The audit report was prepared in writing and it was decided that an unmodified opinion would be expressed. They want to finally issue which opinion? Unmodified opinion. So the first section of the audit reports includes the auditor's opinion and the heading opinion should be there. Following the opinion section, there should be basis for opinion paragraph. And when expressing unmodified opinion, what terminology auditor should use? In our opinion, the accompanying financial statements give a true and fair view, quite obvious. During the audit team has observed that there was uncertainty in health and wealth, Health is Wealth Limited relating to the future outcome of regulatory action. Material uncertainty related to going concern could be. So a paragraph was included in the auditor's report that referred to this matter, which was appropriately disclosed in the financial statements and in the auditor's judgment was of such importance that it is fundamental to users' understanding. So now immediately the thing which should strike your mind is emphasis of matter paragraph. So when emphasis of matter paragraph will be used? When some information is already presented or disclosed in the financial statements, but the auditor is feeling that it is so important for the user to understand it. Now what is the auditor's course of action? He can highlight the same in which paragraph of the audit report? In the emphasis of matter paragraph. So you are supposed to highlight this particular matter in emphasis of matter paragraph. Next one. CAA also determined that financial statements included comparative information required by applicable financial reporting framework and whether such information was appropriately classified. One team member, Mr. R, was curious to know whether auditor's opinion referred to the corresponding figures or not. Whenever the corresponding figures are presented, we already know when corresponding figures are presented as per SA 710, opinion will relate to only current year. It will not have any relationship to the previous year except in some circumstances. Next one, CAA explained the circumstances to Mr. R in which that corresponding figures are presented. Auditor's opinion will refer to corresponding figures also. Now on the basis of all this understanding, we have to answer some MCQs. Let us see. CAK explained to Mr. N the pervasive effects on the financial statements in the auditor's judgment. Which of the following combination best answers as explained by CAK? As we have already seen this, the pervasive definition includes only three things. The fourth point will not be considered under pervasive definition. So what will be the correct combination? 1, 2 and 3. All these three collectively can define the term pervasive. So that's why option D is going to be the correct option here. Next one. When expressing an unmodified opinion on the financial statements, SA and company use the phrase. Which phrase they have used? In our opinion, the accompanying financial statements give true and fair view of financial statements, etc. Now the question is, which is the other phrase which is regarded as being equivalent to the above phrase and could also be used by SAM and company? That means apart from this phrase of giving a true and fair view, what other alternative can be used? We all know that SA 700 permits us to use two lines, one of the two options to choose from. One is you can say whether financial statements give true and fair view. Other one is you can also say financial statements present fairly in all material respects. So let us see now which is that option. In our opinion, the accompanying standalone financial statements give a true and corrective view, not true and corrective view, true and fair view only. In our opinion, the accompanying financial statements present correctly. No, it should be present fairly. In our opinion, the accompanying financial statements present fairly in all material respects. Yes, this should be the correct option. Let us read the D and find out the mistake there also. In our opinion, the accompanying financial statements give a correct and fair view. No, it should be true and fair view. So option C will be the correct option. Next one, which of the following statements is not included in section with the heading basis for opinion paragraph? Which is not included, they are asking. As we know, 4 items should come in the basis for opinion paragraph: that you have done the audit as per standards on audit, that give a reference to auditor's responsibility paragraph, and apart from that, even you should say that you comply with the ethical requirements and code of ethics and whether you have obtained sufficient and appropriate audit evidence or not. These 4 should come under basis for opinion paragraph. They are asking which will not come. Let us find out which is that other one. Audit was conducted in accordance with standards on audit. It will come. Audit is independent of the entity in accordance with relevant ethical requirements and the auditor has fulfilled ethical requirements. Yes, this also will come. Description of auditor's responsibilities under SAS. Yes. State whether the auditor believes that the audit evidence the auditor has obtained is sufficient and appropriate to provide a basis for auditor's opinion. So if you observe carefully here, yes, this is actually wrong. So the minute mistake here, audit was conducted in accordance with accounting standards they are telling. No, not accounting standards. The audit should be conducted as per auditing standards. See, you have to pay attention to that minute details. So even I missed it out. So audit should be conducted in accordance with auditing standards, but here the phrase which they are using is accounting standards. So that's why this option should not be included in my basis for opinion paragraph. Why? Because we have to say audit was conducted in accordance with auditing standards, not accounting standards. So option A should be the correct option here. So that's why whenever you read the MCQs, please pay attention to the minute details. Even I missed on one minute detail. This could happen even with you in the exams also. So that's why whenever you are answering to the MCQs and true or false statements, read it a minimum twice, so that at the first time when you give the reading, you might feel that you have understood it comfortably. But when you give the second reading, then you can find out these kind of minute details. So the correct option should be option A. Next one. A paragraph was included in the auditor's report of Health is Wealth Limited that referred to a matter which was appropriately disclosed in the financial statements that in the auditor's judgment was of such importance that it was fundamental to users' understanding of the financial statements. What is this section of the auditor's report called? Obviously, emphasis of matter paragraph, which is very fundamental to users' understanding. Those matters we come and highlight it in the emphasis of matter paragraph only. Next one. Now let us have a look at question number 1.5. CAA explained the circumstances to Mr. R in which when the corresponding figures are presented, auditor's opinion referred to the corresponding figures. Which of these circumstances did he mention to Mr. R? So now this question is regarding SA 710. So what is this question about? As we know, SA 710 is talking about comparative figures, comparative information, last year's information. And SA 710 says comparative information can be of two types. It could be corresponding figures or even it could be comparative financial statements also. Now, if it is a corresponding figures, the auditor's opinion shall refer only to current year. If it is a comparative financial statements, auditor's opinion shall refer to all the years presented in the financial statements. But if it is a case of corresponding figures, even though in normal circumstances opinion refers to only current period information, there are some exception to this. That means even though if it is a corresponding figures, in some cases our opinion might even refer to prior year's information also. So there are some three exceptions are there. What are that three exceptions? So SA 710 says prior year financial statements were audited. And in the prior year's financial statements, modified opinion is there. When I say modified opinion, either qualified, adverse or disclaimer of opinion is there. And in the current year, auditor found a misstatement which is related to this last year's modification. That misstatement is still unresolved in the current year also. That means because of whatever reason, last year auditor gave a modified opinion. If that reason is remaining relevant and valid for the current year also, then the current year auditor will modify current year's opinion and he will give reference to previous year's information, which we generally don't do it. But since it is an exception, we will do this. And one more case, prior year financial statements are audited, but the auditor has given unmodified opinion. In the current year, auditor found a misstatement which is belonging to previous year and the management did not present it properly. Then also auditor will give a reference to prior year's information. And one more case, the last one, prior year financial statements are altogether unaudited. Then the current year auditor will mention in the other matter paragraph that last year's financial statements are unaudited. So in these three exceptional circumstances, auditor's opinion will refer even to prior periods also, even though it is a corresponding figure. So let us see what is that circumstance, right? Which of these circumstances did he mention? Let us see. First one, if the auditor obtains audit evidence that a material misstatement exists in the prior period financial statements on which a modified opinion has been previously issued. So if you see here, they are telling if the auditor obtains audit evidence that a material misstatement which is existed in what? Prior period on which a modified opinion has been previously issued. No, in the current year, if you find a misstatement which is belonging to prior year, then we will give a reference to the prior year information. So this is not the correct option. In this case, we will not give reference to prior years. Next one, if the auditor report on the prior period as previously issued includes a qualified opinion, disclaimer of opinion or an adverse opinion, and the matter which gave rise to the modification is resolved already. When it is unresolved, then we give reference. When it is resolved, why we need to give the difference? Why we need to give the reference? Not required. So in the first point, instead of exist in the current period, if you find it out as a current period, then this option would have been correct. In the option B, if saying unresolved, if they say it resolved, if instead of saying resolved, if they say it unresolved, then this option would have been correct. Next one, point C. Prior period financial statements are audited by another auditor. This has nothing to do for giving a reference in our opinion. And last point, prior period financial statements were not audited. Yes, in this case we give reference to the prior year's information, and particularly in other matter paragraph we give this reference. So option D will be the correct option. So that's what even the key also will be. So if we have a look at the key, so what are they trying to say here? Right. So this is the key actually. So for 1.1, as we have seen, D 1, 2 and 3. 1.2, C, in our opinion, the accompanying financial statements present fairly in all material respects. And 1.3, option A, audit was conducted in accordance with auditing accounting standards. It should have been auditing, but accounting they have given. So that's why this option will be wrong. And 1.4, emphasis of matter. 1.5, prior period financial statements are not audited. That's all. So this is regarding the first case scenario based MCQ. So let us now discuss case scenario based question number 2. Bharat Bank, a nationalized bank, has branches all over India and has been the most popular public sector bank in India for the past few years. The bank is governed by Banking Regulations Act 1949, and also central statutory auditors of the bank, ABC and Associates, were appointed according to the provisions of the relevant enactments. Nothing but there is a bank, Bharat Bank, which is a nationalized bank, and for them ABC and Associates, an audit firm, has been appointed as an auditor. Next one, the engagement partner CAC commenced the audit with his team of 7 members so that audit is completed on time and all the documents are submitted before the due date. So they are telling there are 7 members in the engagement team. The audit at all branches also started simultaneously, and ABC Associates was in constant touch with all the branch auditors to ensure timely completion of audit. Next, as per the audit strategy and plan, CAQ along with Ms. R and Mr. P were assigned the audit of advances of the Bharat Bank. A few members of the engagement team were allocated the work related to advances. Next one, advances constituted largest item on the assets side of the balance sheet of the bank. Since audit of advances is one of the most important areas covered by auditors in a bank audit, it was assigned to CAQ since he was more aware of various functional areas of the banks or branches, its processes, procedures, systems and prevailing internal control system. CAQ started with verifying whether advances were classified as per RBI prudential norms. There were 5 categories of advances were available to CAQ for verification. They were standard and regular, substandard, doubtful, loss and special mention accounts. So here there is something which one new categorization you are able to see. So you might have seen as a part of the Banking Regulation Act or as a part of our audit of banks discussion, generally we divide assets into 4 categories, which are, one is standard, substandard, then we have doubtful category and loss category. But here they are saying there is one more categorization of the advances, which we in short call it as SMA, which is nothing but special mention accounts. Now let us take some time in understanding what is this special mention accounts. In order to understand this information not there in our study material, but in the same RTP there is one question given regarding SMA. So from the same RTP we will understand what is this SMA, then we will come back to this MCQ. So let us go to that particular question which has been given in the same RTP regarding that SMA accounts. So here if we observe in this question number 26, point number A, they say that, let me read the question first. CA Puranjay is appointed as statutory branch auditor of 2 branches of a nationalized bank for year 2021-22. During the course of audit, he came across the following. While verifying advances of one semi-urban branch, he noticed substantial number of accounts categorized as SMA, special mention accounts. In this context, explain the nature and significance of SMA. So in this answer, for the answer given to this question, they have explained what is this SMA. We will understand that, then we will go back to that case scenario based question number 2. So let us see what they are explaining regarding the SMA accounts. Guys, this content is not there in the study material or even in our material. So let us try to understand it separately here. So let me go to question number 26. In that also point number A. So here they are explaining something related to special mention accounts. Let us try to understand. Special mention accounts are those accounts which are resulting signs of incipient stress leading to possibility that borrowers may default on debt obligations. Which means SMA means it is not already become NPA, but it is showing signs of becoming NPA. That is what simply if I have to put it in layman language. So they are telling which are resulting signs of incipient stress. That means we are assuming that these assets are undergoing some stress in the repayment. When I say stress, financial stress we are talking about. So that these borrowers will have a possibility of making default. And if we read the next line, these are in the nature of warning system to alert the banks. These are in the nature of warning systems to alert the banks about probable NPAs. They have not yet become NPAs. They are about to become NPAs. That hint will be given to the bank through this SMS, so that remedial actions can be taken before accounts actually turn into NPAs. Therefore, their significance lies in the fact that proper and timely identification of SMS can help in preventing turning potential NPAs into actual NPAs. So nothing but which are having a chances of becoming NPAs, those kind of accounts will be classified as SMS, special mention accounts. Sir, why we need to identify this? Why? Because if you came to know this is having a chance of becoming NPA, so that bank can take enough of remedial actions and prevent that probable NPA turning into an actual NPA. This is what the special mention accounts. So this is what the reference which was given in the case scenario based MCQ. I hope you understood this SMS. Now let us go back to the MCQs once again. So if you go to case scenario based MCQ number 2, yes, let us continue our reading. Fine. An aging analysis was available for doubtful advances and special mention accounts, which was examined in detail by CAQ. So they have even verified the aging analysis also. Nothing but depending on number of days they are owed you, we will classify the data like 0 to 30, 30 to 60, 60 to 90. So like this, that we call it as aging analysis. Mr. R, on being instructed by CAQ, verified the securities offered by the borrowers for the bank finance. For a particular customer named Aqua Brass Private Limited, the security was in the form of delivery of goods by the borrower to the bank with the intention of creating a charge thereon. What do we call this mode of security as? Pledge. Why? Because pledge involves delivery of goods to the banker. So Aqua Brass is getting the loan by giving delivery of the goods. So the mode of creation there is pledge. Next one. The legal ownership of the goods remain with Aqua Brass. In case of another customer, there is another customer called Prism Works. There was a transfer of life insurance policy in favor of the bank as a security. So this is actually a actionable claim. So when actionable claim is given as security, that mode of creation of security we call it as assignment. So Aqua Brass mode of creation of security is pledge, whereas Prism Works has given life insurance policy. So the mode of creation of security is here assignment. Next one. The bank has absolute right over the policy. Mr. examined all the relevant documents regarding that securities. Next one. While checking the classification of NPA, Mr. P came across a customer named Trustworthy, whose term installment was overdue for 90 days. 90 days, guys, not more than 90 days. NPA related things will come into picture only when the amount is overdue for more than 90 days. But here they are telling it was overdue only for 90 days, not more than 90 days. But it was 100% secured against the office building. Since it is not overdue for more than 90 days, can it be classified as NPA? Ignore the security and all. When we classify this as NPA, we classify it as NPA when it remains overdue for more than 90 days. But in the given case, it is overdue for 90 days only, not more than 90 days. So no NPA classification will become applicable to Trustworthy. The same was classified as substandard, which is actually wrong here. There was another customer named Super 40 who has a cash credit account and a term loan with the bank. Super 40 has been paying the installments on the term loan as well as the interest on the cash credit account regularly. So this person is having two loans, Super 40, one cash credit loan and another one is long term loan. What they are telling, with respect to the term loan, he was paying interest on time and he was even paying the principals also. So there is no overdue when it comes to term loan. Mr. P verified the drawing power of Super 40 and found it to be less than the sanction limit. Drawing power is less than sanction limit, no problem. Outstanding balance of Super 40 during the whole year exceeded the drawing power but less than sanction limit. What they are telling, the actual outstanding amount has exceeded the drawing power and throughout the year it has exceeded the drawing power. since the amount has exceeded the drawing power for more than 90 days, his account will be classified as NPA. When I say account will be classified as NPA, entire Super 40 related loans and advances, everything will be classified as NPA. So he is having two kinds of loans. One is a term loan, other one is cash credit loan. So NPA related provisions are attracted to cash credit loan. That doesn't mean only cash credit will be classified as NPA. All the loans and advances in the name of that customer will be classified as NPA. So cash credit loan also will be classified as NPA, and even term loan also will be classified as NPA. Why? Because NPA classification, we do it on the basis of borrower, not for each and every kind of loan and advance separately here. So both the advances to Super 40 were classified as standard, which is wrong. Why? Because they have become NPA, they no longer can remain in the standard category. Next one. On examination of large advances, CAQ noticed that a customer named Stylish and Smart Private Limited has one funded loan and one non-funded loan. We know what is funded, what is non-funded. Funded loan involves actual outflow of funds from the bank. Non-funded loans does not involve any outflow of funds. Next one. CAQ checked in detail whether commission earned by the bank on the guarantee was provided for on accrual basis or not. Next one. CAQ along with Mr. R and Mr. P verified the advances in detail and also recommended a few changes in the classification provision based on the examination of samples selected by them. This is what the case study. Let us try to understand the question. Based on the above information, answer the following questions. What are they? What are subcategories of special mention accounts? So here they are asking one more requirement regarding SMS, how we will classify. So as per the Banking Regulation Act, SMA classification should be done something like SMA 0, which means accounts which are just showing stress signals which are not yet overdue. Then you have to classify it into SMA 1 category, which are overdue for 31 to 60 days. Then SMA 2, which are overdue for 61 to 90 days. So as I have told, this will not become NPA. Why? Because NPA comes into picture only when it remains overdue for more than 90 days. These are all showing potential signs of becoming NPA. So proper classification will be this option A, SMA 0, accounts is showing stress signals, SMA 1 overdue between 31 to 60, and SMA 2 overdue between 61 to 90. So this should be the proper classification as per Banking Regulation Act. So option A will be the correct option. Remaining options will not be. Next one. Sorry, not accounts not yet due for payment. These are actually overdue, but they are showing stress signals. That means you can take it as 0 to 30 days, which are overdue for 0 to 30 days. You can take it, that we generally call it under SMA 0. Next one. Creation of security of Aqua Brass Private Limited and Prism Works was in the form of. So we have already answered this while explaining the case study. Aqua Brass Limited, they have pledged, and Prism Works, they have done assignment. This we have already explained. So option D will be the correct option, pledge and assignment. In your opinion, is trustworthy a standard asset or a substandard? So I have told you that trustworthy, overdue for exactly 90 days. So it need not become NPA. So that's why it will be a standard or substandard. It will be a standard only. So where it is? This one. Since it is not overdue for more than 90 days, it is a standard asset irrespective of security. So it is just overdue for 90 days. It is not overdue for more than 90 days. Next one. Is Super 40 correctly classified as a standard asset? That Super 40 case, if I have told you, both the assets, both the term loan and also cash credit, both has to be classified as NPA. So what they are doing, but they have classified it as a standard. That is wrong actually. No, since option A is wrong. Why? Because they are telling yes. Why? Because it should not be standard. So A and D will get eliminated. Option B, let us see what they are telling. No, since the outstanding balance of the cash credit facility exceeded the drawing power for more than 90 days, so both the advances, term loan and cash credit facility will be classified as NPA. Yes, option B is correct. Other option. No, since the outstanding balance of a cash credit facility exceeded the drawing power for more than 90 days, only cash credit facility will be classified as NPA. This is actually wrong. What will be classified as NPA? Both the advances. Why? Because classification will be done borrower wise, not account wise. Next one. Which among the following is a non-funded loan which does not involve actual outflow of funds? Demand loans, it involves outflow of funds. Bill discounted, it also involves outflow of funds. Letter of credit is something which will not involve outflow of funds. So letter of credit will be correct option. So if we have a cross check with the answers, so if we have a check at it here, so first one, yes, A correct option, or D correct option. C, since it is not overdue for more than 90 days, it is a standard irrespective of the security. Option B, no, since the outstanding of the cash credit balance exceeded drawing power, so both the advances will be classified as NPA. Option C, letter of credit, which does not involve actual outflow of the funds. So this is what the second case scenario based MCQ. Now let us try to understand general MCQs which are given here. So let us try to understand now general MCQs. Case scenario based MCQs are over. Very simple questions. So question number 1, as per essay 210, preconditions of an audit does not include which is not included in the preconditions of the audit. So let us try to understand. First one, acceptability of financial reporting. Yes, this is included. Responsibility of management. Yes, this is included. Making records available to the auditor. Yes, right of auditor right to provide. Auditor will have right of access to the books and documents. This is the management's duty. This is also included. Integrity of the key managerial person. This is not a precondition. This is something which we need to check before accepting and continuing client relationship. So option D will be the correct option. So all the first three are included in the preconditions, whereas option D is not included in the preconditions. So option D will be correct option. Next one, an auditor signs a false audit report knowingly. Which of the fundamental principles of professional ethics is violated? Obviously integrity. Why? Because integrity means being honest, etc. And one more thing they say, you should not get associated yourself with any such document which you know it to be false or misleading. Here they are telling an auditor signs a false audit report after knowing that it is false. So he has violated the ethical requirement of integrity. Next one, which of the following statements is most appropriate? Audit program is a detailed plan of audit strategy. Not exactly. Audit program is a detailed plan of applying audit procedures, not audit strategy. Audit plan actually there. Audit program cannot be reviewed. No, it can be reviewed. Audit program is a detailed plan of applying audit procedures. Yes, this option is very correct. And audit program is relevant for the year for which it is prepared. It is useless for subsequent years. No, one of the main advantage of maintaining audit program is that will help you even for the audit of subsequent years also. Next one. A company is engaged in the business of obtaining eggs from 1-day-old chicks. Which of the following is not an example of event or condition that may cast a significant doubt on entity's ability to continue as a going concern? They are asking you not to identify event which create a doubt regarding going concern. They are asking you to find out from the 4 options which is not an event which create a doubt regarding going concern. So if we understand, first point, morality of 90% of the livestock of the company. If 90% of the stock, 90% of that animals, livestock, if their morality is in danger, altogether the business will get closed. No, 90% of morality is in danger. So that is an event creating a doubt regarding going concern. Yes, this is a indication regarding going concern. Decision by government to ban commercial rearing of the birds amid protest by activists. Changes in the laws and regulations. One of a event regarding significant event which created doubt regarding going concern. Next one. Shifting of farm labor to respective villages due to MGNREGA scheme of government causing acute scarcity throughout the year. So because of some law or regulation, this farm labor has to be shifted to relative villages. The labor who are working in that industry has to be shifted to related villages. Now during that, when they are getting shifted to respective villages, there might be a problem of scarcity of the staff. So labor shortages, this is also one of the effect on going concern. And increase in the cost of feed of chicks by 20%. This is not something which will have a altogether going concern problem. If the cost of the raw material is increasing, what company can do is they can increase the selling price and continue in the business. So just because the cost of raw materials are increasing, that can't be taken as a significant event which creates a doubt regarding going concern. So option D will be the correct option. Next one, letters of credit and foreign bills purchased and discounted are examples of. Letter of credit is a funded, non-funded facility. Foreign bills discounted is a funded facility. So it will be, letters of credit is a non-funded advance and second one is a funded facility. Yes. Option B will be the correct option. Letter of credit does not involve any outflow of funds. So that is a non-funded facility. Foreign bills purchased and discounted, it is going to be a funded facility. Why? Because it involves actual outflow of funds. So this is what regarding MCQs which are given as a part of this RTP. So let us try to address now true or false kind of questions. Question number 1. The level of sampling risk that the auditor is willing to accept will not affect the sample size. This statement is false exactly. Why? Because the sampling risk which auditor is willing to take will have an effect on the sample size. If the auditor is willing to take less risk, he will go for a bigger sample size. If the auditor is willing to take more risk, he will go for lower sample size. So yes, they have an inverse relationship. The given statement is wrong. They are telling will not affect, but actually they have a relationship between each other. So that's why the given statement is false. Second one, there is no difference between audit and review. This statement is also false. Why? Because audit is a reasonable assurance engagement and review is a limited assurance engagement. So in the audit, we try to obtain reasonable assurance whether the financial statements are free from material misstatements. But in review, we don't even get reasonable assurance. Also, we try to get limited assurance only, like audit of quarterly, review of quarterly financial statements. We do very limited verification there. So both are actually different from each other. Negative assertions encountered in the financial statements may be either expressed or implied. Yes, this statement is true. First of all, negative assertions means even if you are saying that we don't own any building or we don't have any contingent liability, that assertions can be negative assertions also, and even that negative assertions could be either expressed or implied. Assume if the management is expressly writing in their notes to accounts, we don't own any contingent, we don't have any contingent liability. It is a express negative assertion. If there is no land and building shown in the balance sheet, that is an implied negative assertion that company does not hold any land and buildings. This given statement is correct. Next one, development of an audit plan is important before the establishment of overall audit strategy. This statement is false. Why? Because first audit strategy will be developed, then to address the various matters in the audit strategy, audit plan will be developed. But here what they are telling, first you have to develop an audit plan, then you have to develop an audit strategy, which is exactly opposite, because of this statement is going to be wrong here. Next one, an unexplained decrease in the GP ratio may increase due to fictitious sales. This is also false. Why? Because if you record fake sales, that will increase your gross profit ratio, that will not decrease your gross profit ratio. If you want to decrease the gross profit ratio, either you have to suppress the sales or create fictitious expenses or purchases. So by recording fictitious sales, you are increasing the sales. If you increase the sales, gross profit ratio will be increased, it will not be decreased. Next one. An auditor has to report on the matters specified in section 143 subsection 1 of the Companies Act, which means their intention is an auditor is required to mandatorily report on all the 143 subsection 1 requirements. Do you agree with that? No. Under 143 subsection 1, we have 6 matters which are required to be reported, and even the Companies Act says that if you have negative comments, if you have unfavorable comments regarding any of the 6 points, then only you are required to report. If you have all the positive comments regarding the 6 points, you need not report any of the 6 matters. Next one. So this statement is also false. Next one. There is an inverse relationship between detection risk and combined level of inherent and control risk. Nothing but there is an inverse relationship between detection risk and risk of material misstatement. Combined level of inherent risk and control risk means what? That is nothing but we call it as risk of material misstatement. And between risk of material misstatement and detection risk, what relationship exists? Inverse. If the auditor assesses a high risk of material misstatement, he will try to keep the detection risk at a low level. If he assesses a low risk of material misstatement, he will try to keep the detection risk at a little bit higher level. So inverse relationship only will be there. This given statement is true. Next one. For auditor's opinion, reasonable assurance is a absolute level of assurance. This is absolutely false. Why? Because reasonable assurance is a high level of assurance but not an absolute assurance. So this statement is also going to be false here. So these are the true or false statements which have been given. Now let us have a look at some descriptive questions which are given here. First we will start from chapter 1, nature, objective and scope of audit. There are practical and legal limitations on the auditor's ability to obtain audit evidence. Explain giving examples. Also explain the difference between audit and investigation. So two questions are there, audit and investigation. Audit happens, so audit is a as we know, audit is a general purpose assignment, whereas investigation is a special purpose assignment. Audit will happen with the intention of expressing the opinion. Investigation will happen with the intention of finding out exclusively the frauds. And sometimes what will happen is first audit will happen, the findings from the audit will result in investigation. So first you have to write that audit and investigation differences, and even they are talking about one of the inherent limitations. They are saying practical and legal limitations on the auditor's ability to obtain audit evidence. Nothing but that nature of audit procedures, inherent limitation, whatever is there, that you have to write. And there are 3 examples also they will give, like sometimes management will not intentionally provide the information. Fraud might be carried out in a sophisticated and carefully organized manner which will not be identified by normal audit procedures. And audit is not like a official investigation into alleged wrongdoing, so some powers might not be available for the auditor. This is what question number A is about. Next one. The auditor cannot be expected to disregard the past experience of the honesty and integrity of the entity's management and those charged with governance. Nevertheless, irrespective of that, a belief that management and those charged with governance are honest and have integrity does not relieve the auditor of need to maintain professional skepticism. That means no matter how much integrity and honesty the management and those charged with governance of the company is having, auditor is still required to maintain the attitude of professional skepticism. So they are asking you to explain. Simply we'll try to explain about professional skepticism. As we know, 3 characteristics will be the attitude of questioning mind, being alert to unusual circumstances, and critical assessment of the audit evidence. and examples also we have to write, like what are the examples of unusual circumstances, what do you mean by critical assessment of audit evidences, and by maintaining professional skepticism we can reduce three kind of risk of overgeneralizing while taking decisions, risk of overlooking unusual circumstances, taking inappropriate decisions regarding nature, timing and extent of audit procedures. Next one, 3A. The firm should establish policies and procedures designed to provide it with reasonable assurance that it has sufficient personnel, staff with the capabilities, competence, commitment to ethical principles, explain clearly stating personal issues addressed by such policies and procedures. Nothing but this question is from essay 220. In that also, what policies you need to have regarding human resources, that point you are supposed to write. Like we need to have suitable policies regarding their recruitment, regarding their career development, and also compensation, estimation of their personal needs. So that paragraph you are supposed to write here. Next one, an auditor who before the completion of the engagement is requested to change the engagement to one which provides a lower level of assurance should consider the appropriateness of doing so. Explain the circumstances which may contribute towards a request from the client for the auditor to change the engagement. Nothing but they are asking you that the changes in the terms of engagement as per essay 210 from nature, objective and scope of audit. There we say no, when there is a reasonable justification we can agree, when there is no reasonable justification we should not agree, and when the client is permitting us not to change the terms as per is not agreeing to continue the audit as per original terms, we should withdraw from the audit. And along with that, in what circumstances the client will come to you and ask you for the changes. Like three reasons they will say: change in circumstances, misunderstanding of the original terms and conditions, or sometimes with a view to intentionally restrict your scope. The question is directly there from your from our material, and even there is one test your knowledge questions also given here. Next one, let us talk about now chapter number 2, audit strategy, planning and program. The nature, timing and extent of the direction and supervision of engagement team members and review of their work depending on many factors. Discuss those factors. So what are the factors which affect direction, extent and review of engagement team members? Like it depends on experience of the engagement team members, how capable they are. It depends on the risk of material misstatement. It depends on the areas of the audit, and review has to be done by the engagement partner himself, or if not possible some independent reviewer. So all these things we have already covered. Direct question. Next, explain what do you mean by documentation of audit plan, discuss the purpose served by it and elaborate the tools used by the auditor to reflect the particular engagement circumstances. Nothing but this is about documentation of the audit plan. So whatever work we are doing for the whatever plan, strategy, program we have, all that things are required to be documented, and what specifically you have to include in the documentation, that's what they are asking you here. So like as you would see, so the documentation of audit plan is a record of planned nature, timing and extent of audit procedures. That means what and all risk assessment procedures we have performed, what further audit procedures we will perform, everything needs to be documented as a part of our audit plan. It also serves as a record for planning of the audit procedures that can be reviewed and approved prior to their performance. If you maintain documentation, you can review before you finalize your audit whether your team has done the work properly or not. That review also will happen only if you have documentation. And the auditor can use either standard audit programs or audit completion checklist according to the circumstances of each and every engagement, which means we can't develop one standardized audit program. We need to tailor it, we need to customize it as per the requirements of each and every audit. Nothing but from our material, if you want to write, you can write about the documentation of audit plan and add one more line there: according to the requirements of each and every client, the audit plan has to be customized. That's what will be the answer for this. Next one, while developing an audit program, the auditor may conclude that relying on certain controls is an effective and efficient way to conduct his audit. Explain stating the points which has to be kept in mind while developing audit plan. What points you need to keep in mind while developing an audit program, they are asking. This is also there in our material. Like they will say, we should always try to stay within the scope of our assignment, and we should draft the audit program in a written format, and we should determine out of all the evidences which evidence will give you best satisfaction. That evidence you have to select. Apply only those procedures which will fulfill your purpose. Eliminate all those procedures which are not going to help you out in the audit. And include the audit objectives for each area and try to obtain sufficient and appropriate audit evidence. Consider all possibilities of error and also include some time for coordination of the audit procedures, also coordination of the audit team members also. Next one. Now let us have a look at the next question from audit documentation and evidence topic. CAR comes to know some very critical information with regards to the business cycle of an entity for which he has already issued the audit report, which became known to him as an auditor after the date of auditor's report, but which existed at the date and which, if known at that date, might have caused the financial statements to be amended or the auditor to modify the opinion in his audit report. Simply, if I have to end it in one line, the auditor found some subsequent event. That means after he signed the audit report, he came to know about subsequent event. But this event was existing before you signed the audit report only. And if you had known about this event at the time of signing the audit report, you would have given some different opinion. You would have modified the opinion. So what is the one single line we can conclude it? Auditor found some subsequent event after the date of auditor's report. Next one. He wants to perform additional audit procedures to satisfy himself. We have seen SA 560 will tell us about some audit procedures, but that is not what the question. Let us see the question. What is the question? As an auditor, what he shall document on the matters arising after the date of audit report. They are telling auditor will perform audit procedures, but they are not asking what are that audit procedures. What they are asking is regarding that subsequent events, what you will document. This is where the student gets confused. They will immediately write the audit procedures from SA 560. No, that is not the question is about. The question is what things you will document in your audit documentation regarding that subsequent event. So here in the answer, this question will be there in the additional concepts. So what they say here is, as per SA 230 audit documentation, if in exceptional circumstances, the auditor performs new or additional audit procedures or draws new conclusion after the date of auditor's report. That means after you give the audit report, if you perform any audit procedures and draw new conclusions, then you have to document some extra information. Once again, I am telling this question is not asking you audit procedures. This question is asking you about documentation. So SA 230 talks about that documentation. What is that things which you need to document? What circumstances you have come across, what is the nature of the matter that you have come across, that has to be documented. This is what I have come across. The new or additional audit procedures which you have performed, on that new matters which have come to your notice, what extra audit procedures you have performed, what extra audit evidences you have obtained, what conclusions you have reached, and how it had an effect on your auditor's report. And also when and by whom the resulting changes to audit documentation were made. In this engagement team member, who is making that changes? Is the engagement partner himself doing it, or he has assigned this work to any audit manager? So who is the person who is making the amendment to that audit documentation? That person's name, and also who has reviewed that changes in the documentation, that also needs to be documented. So these are the matters which are required to be documented regarding subsequent events. Next one, the auditor shall prepare audit documentation that is sufficient to enable an experienced auditor to understand significant matters arising during the course of audit. Nothing but they are talking about manner of audit documentation. As we have seen, SA 230 says audit documentation should be maintained in such a manner some other experienced auditor having no previous connection with the audit should understand what audit procedures we have performed, what conclusions we have reached, and what evidences we have obtained. Next, explain the above statement. Just write the paragraph whatever I have told you. So as per SA 230, audit documentation should be maintained in such a manner some other experienced auditor should understand all these things. Next one, the question did not end there. They are even asking also give examples of significant matters. So there will be one small question in our material, documentation of significant matters. Whether a matter is significant or not, that depends on auditor's professional judgment. But there are some examples of the significant matters which the standard says, matters which give rise to significant risk. Or you performed audit procedures, they indicated that the financial statements could be materially misstated, or there is a need to revise your risk of material misstatement, or the circumstances that created lot of difficulty on the auditor for performing audit procedures, or findings that could result in a modification of the audit opinion, or findings that require you to highlight it in the emphasis of matter paragraph. These are just the examples of the significant matters, but by the end of the day, what is significant, what is not significant, that exclusively depends on auditor's professional judgment. So we are done with 6 questions from this RTP. Let us try to proceed further and try to understand the remaining questions. So we'll start with question number 7 now. So let me read question number 7A. An auditor is called upon to assess the actualities of the situation, review the statements of accounts, and give an expert opinion about the true and fairness of such accounts. Nothing but as an auditor, we will verify whether the actual situations presented in the financial statements are correct or not, and then we will express our opinion whether the financial statements are ultimately giving true and fair view or not. Yes, this is what we do. Next one, this he cannot do unless he has examined the financial statements objectively. If you have to express your opinion, so you can do it only after you have verified the financial statements in an unbiased manner. Explain. They're asking you to elaborate this statement. So this is nothing but, if you observe that question number 2 from the chapter audit documentation and audit evidence in our material. So if you see there, in the second question, you will be able to find some introductory information. Like, as an auditor, we are supposed to express an opinion that we can do it only by obtaining audit evidence, and we have to verify the financial statements objectively. Like, some general information will be there. That's what you are supposed to write here as an answer. So even if you check this answer, suggested answer given, even it also more or less looks the same. Like, auditing is a logical process. An auditor is called upon to assess the actualities of the situation, etc., etc. Nothing but the same point which the question has been just repeated here. Then objective examination connotes, that means it includes critical examination and scrutiny of accounting statements of the undertaking with a view to assess how far the statements are presenting true and fair view. So if you have to express your opinion, you can't be reckless and negligent, because that will have so much of liabilities or consequences which you have to face. So that's why he needs audit evidence for that. So SA 500, what do you mean by audit evidence? So information which forms the basis or supports the auditor's opinion, that is what we are going to call it as audit evidence. So it is a very general question. So you have to write in general about what actually happens in the audit and what kind of audit evidence you need, and add 2-3 lines regarding objectivity from the ethical requirements. That will be suffice. Next one, 7B. Manya Textiles is manufacturer of bed sheets, curtain cloths and other handloom items, etc., having its plant at Panipat. Auditors SJ and Co. is having doubts over the reliability of information given to him as audit evidence. Also, auditors observed inconsistent information while conducting audit. Guide the auditor as to how they should proceed in the given situation. That is, they are telling that inconsistent evidences are there. As we know that when evidences are all matching with each other, they are more reliable. When evidences are not matching with each other, they are less reliable. So whenever you find any inconsistent evidences, you need to investigate that matter further and try to resolve the matter immediately and find out whether the financial statements are materially misstated or not. That's what you are supposed to do. Apart from that, they are even talking about doubts over reliability of information. So even you can add it here, how you can decide whether evidence is reliable or not. Nothing but we have principles guiding reliability of audit evidence. Some 6 points we have seen there. Like, documentary versus oral, documentary will be more reliable. Internal versus external, external will be more reliable. External also obtained by the auditor directly will be more reliable than obtained through the client. And also, internal evidences will be reliable when they are consistent, when internal controls are effective. When multiple evidences are consistent with each other, they are more reliable. So these are principles. And also about that inconsistency point, to the extent possible, multiple evidences should be matching with each other. In case if there is any inconsistency, auditor should try to resolve the matter immediately and make sure that financial statements are not materially misstated. Next one, question number 8. External confirmation procedure frequently are relevant when addressing assertions associated with account balances and their elements, but need not be restricted to these items only. Apart from confirmations for bank balances and accounts receivables, what are the other situations where external procedures may provide relevant audit evidence in responding to assessed risk of material misstatement? Nothing but this question is from SA 505. The question which they are asking is, first they have given a statement, mainly we use external confirmation for account balances and figures generally. But as we know, the use is not just restricted for amounts and figures. We can use it for various other purposes also. What could be that various other purposes which we already know about it? We can get confirmation regarding qualitative aspects like existence of terms and conditions of contracts and agreements, title deeds held with the third party like banker, discount and these kind of terms and conditions, rate of interest, like this. Other than amounts and other than amounts also, we can use external confirmation for obtaining evidence regarding these kind of qualitative matters also. Next one. Now let us have a look at what are the questions from the risk assessment and internal control topic. So chapter number 4. Question number 9 we will see. First one, define monitoring of controls. In respect of monitoring of the controls, answer the following questions. How monitoring of the controls would help in assessing effectiveness of controls? How can management accomplish monitoring of controls? What is included in the monitoring activities? We all know this direct question from the material. As we know, just implementing controls will not be enough. It needs to be monitored, and monitoring means checking whether the internal controls are operating effectively or not. This the management can do on an ongoing basis or as a separate evaluation. And for doing that monitoring activities, we might use internal information also, we might use external information also, like regulators comments, etc. So that monitoring related content you are supposed to write here. Next one, B point. Explain the matters which should be included for factors relevant to the auditor's judgment about whether a control will be relevant to audit or not. Now, this is nothing but relevance of an internal control. So many controls will be there in the organization, but all the controls might not be relevant for the auditor. Whether a control will be relevant or not, it depends on so many factors, like its materiality, the risk which it is protecting, size of the business, diversity of the business. It depends on applicable laws and regulations. So all that factors you are supposed to write. Direct question from our material. Next one. The review of internal controls will enable the auditor to know the areas where controls are weak. Explain clearly stating benefits of evaluation of internal control. Once again, a direct question. They're asking about what are the benefits for evaluation, benefits for analysis of internal control. Like we'll come to know whether controls are strong or not. We'll come to know where the controls are weak. We can betterly plan our nature, timing, and extent of audit procedures. We will come to know whether internal audit department is working effectively or not. So these are all advantages. A direct question only. Next one. So let us have a look at questions from the chapter Fraud and Responsibilities of Auditor. So question number 11, we will have a look at it. Fraudulent financial reporting often involves management's overriding of controls that otherwise may appear to be operating effectively. Illustrate the techniques. What are the techniques for committing fraudulent financial reporting? Like omitting to record, passing fictitious entries. So direct question from our material only. So like if we have a look at the points. So like recording fictitious journal entries, you can pass fake journal entries. By that you can dilute the picture shown by financial statements, or you are wrongly making assumptions and estimates, like creating excess provision, using inappropriate useful life for assets, or omitting, advancing or delaying recognition, or not recording for entries, or advancing the recognition. That means you are not making adjustment for prepaid expenses, or delaying recognition. That means you are not creating a provision for outstanding expenses. Or even it could involve concealing or not disclosing the facts. Even hiding facts is also a fraudulent financial reporting, not just stating wrong information. If you convey wrong information, if you hide the correct information, that also will come under fraudulent financial reporting. And also client intentionally entering into complex transaction to represent the financial position, or altering records and terms related to significant and unusual transaction. These are all the various techniques for committing fraudulent financial reporting. Now question number 12. Write the examples of circumstances that indicate the possibility of fraud due to problematic or unusual relationships. This question is there in additional concepts. If you go there, you will find this question. So nothing but sometimes when you have a problematic relationship with the client, that means you are not having favorable relationship. Some conflicts are there, like client is not providing you information on time, or client taking lot of time for providing the information. If the client is doing these kind of things, that also indicates that there could be a possibility of fraud. Once again, it is just a possibility, it is not a confirmation of the fraud. So they are asking you to give some examples because of problematic, what kind of situations will indicate that there could be a possibility of fraud arising because of a problematic relationship. The terms of relationship between you and the client are not favorable. So what are those points? Let us see. Denial of access to records. You are asking for information, but the client is denying the access. He is not giving you, he is not sharing with you the books and documents. Undue time pressure. When you go and ask the information from them, instead of providing the information, they are putting some time pressure. Sir, how much time you will take for completing the audit? Complete it within 5 days, within 10 days. They are unnecessarily putting a time pressure on me. Or complaints by management about the conduct of the audit, or management intimidation of engagement team members. That means they are threatening, they are blackmailing us. Nothing but intimidation threat. Unusual delays. When I ask the information, they are not giving immediately. How much simple information I ask, they are giving me only after 2-3 days. So what could be happening during that 2-3 days? Might be manipulation is happening. Next one, unwillingness to facilitate auditor to key electronic files for testing through use of computer assisted audit techniques. Nothing but auditor wants to get access, auditor wants permission to use the client's software, but the client is not ready to give us access to the software. Or denial of access to key IT operations, staff and facilities. They are not even letting us talk with the IT people also. An unwillingness to add or revise disclosure. If I am giving some suggestions, sir, please add this disclosure, that will increase the presentation. They are not at all willing to do it. Or unwillingness by management to permit the auditor to meet privately with those charged with governance. I want to go and talk with him personally, but they are not giving me time for that. Or an unwillingness to address identified deficiencies. I found out weaknesses in the internal control system. I'm reporting the management. If they are proper management, they should have taken rectification action, but they're not doing it. Or frequent changes in the accounting estimates, or inappropriate accounting policies, or even they're tolerating small misconducts also. So all these problematic relationships indicate a possibility of happening of the fraud. So this is what regarding fraud and responsibilities. Now, if you have a look at audit in an automated environment, question number 13. List the points that an auditor should consider to obtain an understanding of company's automated environment. Question number 3 from our chapter. So what and all you will try to understand. Like I will try to get a list of all the softwares, their purpose, are they outsourced or procured? Is the management services are outsourced or handled by the company's management themselves? Is it a market acquired software or built them on or they have built the software on their own? So like this, there will be some typical points which we are supposed to understand. Direct question only, nothing indirect here. Which are specific risks to the company's internal control having IT environment? Nothing but risks of internal control, risks of IT environment, like unusual processing of data or processing incorrect data, and even loss of data, theft of the data, unauthorized changes to the data, unauthorized access to the programs, unauthorized access to the systems logs and all. So these are all the risks which are arising out of IT systems. Next, audit sampling. Explain the method of audit sampling as per the relevant standard on audit. Explain the meaning of audit sampling as per the relevant standard on audit. State the requirements relating to audit sampling, sample design, sample size, selection of items. So they are asking you to define what is the meaning of audit sampling. As we know, performing audit procedures to less than 100% of the transactions in order to form a conclusion on the entire population. That is what we call it as audit sampling. And one more question they are asking, what are the requirements as to sample design, sample size and sample selection? This is also a question we have. When we are deciding on sample design, we have to keep in mind characteristics of the population, nature of audit procedures. And also sample size, it should be in such a manner that overall audit risk is kept at a low level. Selection of items, how the items will be selected. In case if it is statistical sampling, items will be selected on random basis. If it is a non-statistical sampling, items auditor will select it on the basis of professional judgment of the auditor. Next one. This method is considered appropriate provided the population to be sampled consists of reasonably similar units and fall within a reasonable range. That is, it is suitable for a homogeneous population. Explain about that method. Nothing but they are indirectly asking you to write about simple random sampling. So as we know, when all the items are very similar, there we can go for simple random sampling. When we use stratified random sampling, when the population is having dissimilar characteristics or they are having a wide range between them. So since they have given homogeneous population, simple random sampling will be enough. So try to elaborate about that simple random sampling. Next one. So let us have a look at now question number 17, analytical procedures. Explain the aspects which are required to be considered by an auditor when designing and performing substantive analytical procedures, either alone or in combination with test of details as substantive procedures. Nothing but, as we know that when we perform analytical procedure as a substantive audit procedure, we need to take care of 4 steps, 4 aspects we have to keep in mind. So what are that 4 aspects? That is what the question is about. So one dedicated question will be there in the material. When you want to make use of analytical procedure as a substantive audit procedure, 4 steps you need to follow. What are that 4 steps? So first one, we need to determine what is the suitability of analytical procedure. We have so many techniques available. Out of all the techniques, which analytical procedure will be suitable for which item of financial statements? We need to determine that suitability. Next, second step is determining reliability of data, whether you have reliable data or not. Why? Because if you have data reliable, then only if you have reliable data, then only results of the analytical procedures will be reliable. If we don't have reliable data, then the results of the analytical procedures will not be reliable. So that's what second thing we need to consider, reliability of the data. Next, third one, we need to check whether the expectation developed using analytical procedure will result in a material misstatement or not. And last one, we need to investigate whatever deviations we find it out. Why? Because the moment we find out deviation, that doesn't always automatically mean that items are misstated. Sometimes there could be valid and genuine reason also. So whether that deviation has happened because of valid and genuine reason or because of really a misstatement, that we need to investigate further. So that's what even will be there in the answer. First one, we need to determine suitability of analytical procedure. Then second step is checking the reliability of data. Third one, checking whether expectation of recorded amounts is resulting in material misstatement or not, and also finding out, investigating the differences. So determine the amount of any difference from recorded amounts is reliable or not with further investigation. So these are the four aspects which are needed to be kept in mind when you want to perform analytical procedure as a substantive audit procedure. Next one. Let us have a look at now. Next question. Discuss with examples the factors that are relevant when determining whether data is reliable for the purpose of designing substantive analytical procedure. See, just now in this answer we have seen one of the factor which we have to keep in mind is while using analytical procedure whether the data is reliable or not. Why? Because if the data is reliable, then only results of analytical procedures will be reliable. If the data is not reliable, then the results of analytical procedures are not reliable at all. Now, how to decide whether the data is reliable or not? As we know, four things we need to consider. First one, this first factor which will affect the reliability of data is, so if you have a look at the answer, first it depends on source from which you are getting the information. If you are getting it from a reliable, trustworthy source, then the data will be reliable. If the data is reliable, results of the analytical procedures also will be reliable. Second one, comparability. Whether you have any other data to compare with this information. If you have any other comparable information, then we can decide whether it is reliable. If there is no comparability, then we can't decide whether data is reliable or not. It even depends on nature and relevance of the information available. It depends on what is the nature of the information which you are having, how relevant it is for the financial statements. And then finally, one more last item, controls over the preparation of that information available. If there are proper controls which are working over, which are functioning over the present preparation of the information, then the information will be reliable. If the controls over the preparation of the information are not reliable, then the data also will not be reliable. So these are the four factors which will affect the reliability of data. Next one, let us have a look at question number 19. So this direct question we have in our material. They have told you we need to identify the assertion. They have told us some audit procedure. First one, year-end inventory verification. Why we do year-end inventory verification? To find out existence of the inventory. Depreciation has been properly charged on all assets. Nothing but this we can say measurement and also valuation. Depreciation calculation if we are checking measurement and valuation. Why measurement and valuation? Why? Because depreciation is a P&L item also, and at the same time it is even going to affect the value of the assets also. That's why we say measurement and valuation. The title deeds of all the lands are disclosed in the balance sheet are held in the name of the company. Nothing but we are checking the ownership here. So rights and obligations assertions we want to verify. Next one, all liabilities are properly recorded in the financial statements. All liabilities they are telling. So that's why we are trying to verify here completeness assertion. And then finally, related party transactions are shown properly or not. We are trying to check here presentation and disclosure related assertion. So depending on the audit procedure, they are asking us to identify the assertion that we have successfully done it. So this is what question number 19 is about. So let us resume our discussion from question number 20. PK Private Limited, based in Moradabad, is engaged in export of brassware goods. The company has huge export receivables as on 31st of March 2022. It is also analyzed from export sales account of the company that large number of small shipments were almost dispatched daily during the month of March. List out the few audit procedures you would adopt as an auditor to verify completeness of trade receivables, whether the data are completely recorded or not. In order to get that evidence, what things you will try to do here. So even in the answer also, if you observe for complete, very general question from audit of items of financial statements. So what points you will try to check in order to verify completeness assertion? Like if we see, we need to check that particularly invoice raised in the last few days. Why? Because to ensure cutoff date. So generally cutoff date will be 31st of March. Whatever invoices that have been recorded in the books of accounts, that regarding that invoices, risk and reward should have been transferred on or before 31st of March. So perform that cutoff procedures. Check stock records, e-way bill and transporter's receipt regarding actual movement. In order to know whether the goods have been really moved from the company or not, you can cross-check multiple sources. If you have made a sale, the stock should have gone out. That means that entry should be reflected in the stock records. And even e-way bills will be generated. Cross-check with the e-way bills also. Next one, ensure that all goods invoiced prior to cutoff date or year end have been included in the export receivable on sampling basis. Check whatever invoices are there on or before balance sheet date, whether they are really recorded in the books of accounts or not. Check it on sampling basis. Ensure that no goods dispatched after year end should have been recorded in the current year sales. Why? Because their risk and reward will get transferred after the balance sheet date. They should form part of next year sales only. It should not form part of current year sales. So that's what they say, no goods dispatched after year end has been included in the export receivable. Match invoices to dispatch or shipping details. Whatever invoices that are raised, for example, invoices generated on 31st of March. Check against this invoice when the stock has moved out. Sometimes what could happen is invoice will be raised on 30th of March, but goods might have been dispatched after 31st of March. So compare that invoice date with the shipping date. And also test invoices in receivable report, select invoices from aging report of export receivable and compare them with supporting documentation. Nothing but randomly open some trade receivables, in that check some invoice, in that take some entries in their ledgers, check whether that whether that sale entries are genuine or not by checking with the invoices and all the supporting documents. Do it on a test checking basis. So these are the points which we need to verify regarding completeness of trade receivables. Next question. Now we will be discussing about questions related to company audit. So company audit, XYZ Limited is engaged in the business of shoes, having geographical presence across India. They are telling XYZ Limited, so it is not a private company, it is a public company only. Following details are available from the last audited financial statements of XYZ Limited. So last year's details are given. Let us see what are the details. So they are telling that they are having a paid up capital of 9.8 crores as on 31st of March. Turnover is 98 crores and outstanding loans from banks as on 31st of March is 25 crores. Liability on outstanding debentures is 26. So the total outstanding loans, deposits, debentures is total coming to 51 crores. And as we know, the applicability criteria for, and let us have a look at the question. Comment on the applicability of constitution of audit committee for XYZ Limited. They are asking you to comment on whether audit committee is required to be created here or not. As we all know, the criteria for audit committee is going to be, if they are having if it is a listed company, no need to check for any criteria. But in the question, they are silent whether it is a listed or unlisted. So let us take it as unlisted only. For unlisted public company also, it will become applicable if they have a paid up capital of 10 crores or more, if they are having a turnover of 100 crores or more. And one more thing they will say, if they are having outstanding loans, aggregate outstanding loans or borrowings or debentures or deposits of 50 crores rupees or more. In the given case, the share capital is less than 10 crores, turnover is also less than limits only, but the total borrowings have exceeded 51 crores. Yes, this company has fulfilled the condition and it is a public company. They are required to create a audit committee. Next question. Question number 22. S Private Limited has a paid up share capital of 49 crores and borrowings from bank of 99 crores. Their paid up capital is 49, their borrowings from bank is 99. The audit firm P and Company was appointed as statutory auditors of the company for one term of 5 consecutive years. Whether the provisions of rotation are applicable. Just they are asking on applicability of rotation. It is a private company. As we know, conditions for private limited company, if they have a paid up capital of 50 crores or more, or if they are outstanding, or if they are having turnover of 50 crores or more, for both it is 50. Like even as we could see the conditions here, the rotation concept will become applicable for all unlisted public company. Two conditions: if they have 10 crores or more, 50 crores or more of turnover. For a private limited company, the two conditions are going to be from for the private limited company, the conditions will be paid up capital also should be 50 crores or more and turnover also should be 50 crores or more. If any of the two conditions get satisfied by a private company, then rotation becomes applicable. In the given case, the paid up capital is well within the limits, but turnover has already become more than 50 crores, which is 99 crores. Yes, rotation becomes applicable, which means they can appoint an individual for only one term of 5 consecutive years. They can appoint a firm for 2 terms of 5 consecutive years. In the given case, they have appointed audit firm only, but for 1 year, but for one term of 5 consecutive years, yes, that is equally valid, no restriction. But the final conclusion is rotation becomes applicable. Next one, enumerate the circumstances under which the retiring auditor can be reappointed. See, this is a bit tricky question. In our topic, in our chapter of the company audit, we have one question: under what circumstances retiring auditor cannot be reappointed? So, in what circumstances he cannot be reappointed? As we know, if he has lost any of the qualification as required under 141 subsection 1, or if he attracted any of the disqualifications, then he can't be appointed. or he has expressed his unwillingness to act as an auditor. And similarly, if he is not giving a written consent or written certificate that whether his audit will be within 20 or not, then also he can't be reappointed. Or in the shareholders meeting, a resolution has been passed appointing somebody else. So these are the circumstances under which retiring auditor cannot be reappointed. But the question is not when he cannot be reappointed, but the question is when he can be appointed. So you need not look for any other answer. Just for these points only, write the opposite sentences. When retiring auditor can be reappointed, if he is still qualified, if he is still eligible under 141 subsection 1, if he is not retracting any of the disqualification, if he has not given his unwillingness to act as an auditor of a company, if he has given all the written certificates as required under Companies Act, and the shareholders did not pass any resolution appointing somebody else. We have under what circumstances he cannot be reappointed. Just if you write the opposite points of this, the given question gets answered there. Next. So next questions we will see. Now audit report. Mention the examples of circumstances where auditor may consider it necessary to include in an emphasis of matter paragraph. They are asking you to give the examples which kind of matters can be included in emphasis of matter paragraph. So as we have a few examples, like what? So generally we include emphasis of matter paragraph which are to highlight some matters which are already presented or disclosed in the financial statements, which are fundamental to users understanding. And some examples of matters, if you have a look in SA 706, 4 examples they will try to say that, like if there is any uncertainty or litigation which is going on, which is having a effect on the company, that uncertainty or litigation can be presented as an emphasis. Or even when there is any catastrophe like fire accident, floods, etc., that catastrophe can be highlighted as an emphasis of matter paragraph. Or even they will try to say subsequent events, if there are any, that also can be highlighted in the emphasis of matter paragraph. And the last one, and one more example, they will try to say early application of accounting standards also can be highlighted as an emphasis of matter paragraph. So 4 examples I have given in the standard: any material uncertainty or pending litigation, catastrophes which if have happened, and also subsequent events, and early application of accounting standards. Next one, next question, let us have a look at it. While drafting auditor's report of K Limited, what are the matters which are required to be included in the opinion section? As we know, 5 matters will come: name of the entity whose financial statements you are auditing, state the fact that financial statements have been audited, and also explain about the title of components of the financial statements, give reference to notes and significant accounting policies, and also give reference to period covered by the financial statements. These 5 items must come in my opinion paragraph. Next one, let us have a look at the bank audit. In this bank audit also, we are already done with one question. So A point I have already explained about that SMEs which are about to become a potential NPS. So that needs to be presented separately. So that is what we have seen in, that is what we have already seen as a part of that case scenario based MCQ. Next one, there is one more question here. Let us try to understand that also. Now let us have a look at one more question from this bank audit. While verifying interest income of a mid-corporate branch of an urban center having advances consisting of only cash credits for large borrowers, it was noticed that advances of 300 crores were outstanding as on balance sheet date, carrying average rate of interest of 8% per annum. So 300 crores of outstanding cash credits are there at a rate of 8% per annum. One articled clerk in the audit team made a quick back of the envelope calculation of interest income on 24 crores on advances. So one of the article assistant calculated interest. He simply what he did is 300 crores into 8%, so which will be 24 crores. He came to know that interest income should be 24. However, when you have seen the schedule of P&L, interest income is only 10 crore. Discuss any 2 probable reasons. When he did the basic calculation, he came to know that 24 crores should be the interest income. But in the statement of P&L, there is only 10 crore rupees of interest income. What could be the reasons for this difference? Very simple. The main one of the main reason could have been, see, cash credit is the total amount of loan given. It is a short-term loan. He is telling that there is a cash credit of total of 300 crores. But when I say short-term borrowing facility like cash credit or overdraft facility, it doesn't mean that the customer will utilize entire amount. Whatever amount he requires, only that much he will utilize. Like for example, for one person, cash credit limit has been given for 10 crores. That doesn't mean he has to compulsorily take the 10 crores. No. As and when the requirement arises, he will utilize the amount. For example, if he required only 5 crore rupees, so he utilized the amount of only 5 crores from a limit of 10 crores. Now, interest will not be charged on the total limit given, interest will be charged on only the amount utilized of 5 crores. Now, here also what the mistake article assistant could have seen is this 300 crores would have been the entire limit. The actual amount utilized might have been less than this 300 crores. And the interest income will be charged only on amount utilized, not on the total limit. So, this could be one mistake. So might be the point which we want to make here is the amount which the article assistant has seen, that 300 crores, that might be the total limit, that might not be the actual amount utilized. The actual amount utilized might have been very much lower than that 300 crores. On that only interest will be charged. That could be the main reason why you could see that lower income in the statement of P&L. And one more potential reason could be you could not assume that all the 300 crores of cash credits were outstanding from day one itself. Might not happen. Out of this 300 crores of cash credit, some loans have been taken during the later part of the year. No, in the next 6 months or in the last 3 months, some loans they are given. So then it will be wrong to calculate interest of 8% on 300 crores for the entire year. Why? Because some loans were taken at a later time. So for them, for example, if out of this 300 crores, 100 crores of loan were taken somewhere around 1st of January. If that is the case, 100 crores into 8% you can't multiply. 8% into 3 by 12. Why? Because this 100 crores is outstanding only for 3 months. So these could be the two probable reasons why there is a difference in the income between auditor's calculation and management's calculation. Even if we check the answer, that's what they try to say there. Cash credit accounts by their very nature are running accounts and their utilization depends on needs of the business. Further, interest on cash credit account is charged on extent of funds utilized only, not just on the total limit. It could be one reason. One more reason, some large accounts may have sanctioned during later part of the year. So that's why lower income is there in the books of accounts. Next one. Next question. In carrying out audit of advances, the auditor is primarily concerned with obtaining evidence about amounts included in the balance sheet in respect of advances which are outstanding. Explain stating clearly all the consideration in this context. Nothing but what points auditor will try to keep in mind while conducting audit of advances. We'll do some basic checking, like whether the loans are sanctioned or not, whether all the documentations are executed or not, whether security has been registered in the name of the banker or not, drawing power is maintained or not, margin is maintained or not, and also all this registration, especially in the case of securities, are given in the form of shares and debentures. They should be transferred in the name of the banker. All accounts should be kept within the drawing power and sanction limit. So very direct question, how to conduct audit of advances. We have a question in our material, the same thing they are trying to pose a question here. Now let us have a look at the next chapter. So the last topic we have, the 28A, you have been appointed as an auditor of ABC Hotel, a 3-star hotel, for financial year 2021-22. As an auditor, what are the special points that need to be considered in verifying inventories in the nature of food and beverages? So they are asking you to answer how you will verify inventories, stores, especially food and beverages in the case of a audit of a hotel. So very simple. First, we need to check proper inventory records have been maintained or not. And whatever purchases and sale of foodstuff is happening, all the movements, all the transfers must be properly documented. And wherever inventories are kept, that inventory, the room where inventories are all kept, that room should be kept locked and the key should be retained only by the departmental manager. And the key should be given only to trusted people and authorized people. Unauthorized people should not be given that access to the key. And many hotels use specialized professional valuers to count and value the inventory on continuous basis. Nothing but periodically physical verification also should be done. If possible, even you can take the help of some professional valuers in that matter also. And the auditor should ensure that all the inventories at the year end, and that he should ensure that all inventories are valued at the year end, and that he should himself be present at year end physical verification. Nothing but whenever management is doing physical verification of that inventory, the auditor himself should try to be available there. That is what even SA 501 also says, try to attend the management's inventory counting process. So very general question. Next one. Cinescreen Multiplex Limited is operating cinemas in different locations in Mumbai and has appointed you as an internal auditor. What are the areas that need to be verified in relation to receipts from sale of tickets? Very simple. First, there should be some internal control, like entry inside the theater should be authorized only by showing a valid printed ticket. And also all the tickets should be serially numbered, and number of tickets issued for each show, for each class should be different. Earlier we used to have pre-printed tickets. There used to be different colors for that. So that differentiation should be there. If there is any advance booking, for that separate series of tickets should be issued, and all that inventory of tickets, if it is a case of pre-printed tickets, all that unsold tickets should be kept in a safe custody. At the end of the show, a statement should be prepared, how many tickets we have sold, how much cash should have been collected. And also you can even check with, even if there are any free passes, if any free entry has been given inside the theater, check whether that free passes are issued under proper concern management's approval. Reconcile the amount of entertainment tax. Today we don't have entertainment tax, we have GST. You can even cross check the total revenue from GST collections also. Like if the theater is paying 2% of the GST, assume for the time being. So now in a 1 month they have spent a total 2 lakh rupees on the GST. They have paid a total amount of 2 lakh rupees of GST. Then what could have been the income from sale of tickets? It could have been totally 1 crore. 2 lakhs divided by 2%. So like this, even you can cross verify, reconcile from the entertainment tax also. Watch the entries in the cash book in respect of cash collected and sale of tickets for different shows that have been tested. Nothing but they are even trying to asking you to cross check with the sale of tickets income, cash book entries, all that you can cross verify. So this is how you are supposed to verify the sale of tickets income for a movie theater. So that's all guys, that is what regarding this RTP. So as you would have observed, there is no significant changes in here. Only one new question I am able to find, that SMA related question. SMA is something which you might not have seen earlier. So that is the only SMA classification in the in case of advances of the bank. That is the only new thing which I'm able to find in the entire RTP. Rest of the all things are either common sense oriented or direct questions from our material. So hope this video helped you a lot, and all the very best for your examination. Do well in your exams. Bye guys, take care.